in the EV space here, so they don't have to sell as many cars in order to turn a profit. But once again, we see these price wars happening in China and even in the Eurozone, and that's putting pressures on margins across the board here. So NIO definitely has a significant amount of market share, but once again, they're just not up to the production level yet to turn consistent profitability here in the near term.
Dilemma, valuation, prospects. We've got to admit it, NIO's ride in the stock market has been quite a roller coaster. It's been a wild journey, from reaching highs of $67.1 in 2021 to its recent tumble of $4.50. With recent events like the release of March delivery numbers and the introduction of a new subsidy program, investors are left wondering, is NIO's current stock price a bargain or a value trap? NIO recently announced its delivery numbers for the first quarter of 2024, revealing a total of 30,053 vehicles delivered. This figure represents a slight decline of 3% compared to the same quarter last year. However, it's worth noting that NIO's Q1 deliveries were in line with the company's forecast, which was updated just last week. Additionally, March saw a significant uptick in deliveries, with 11,866 units delivered, marking a notable 46% increase compared to February and a 14.3% increase year-over-year. Despite these positive figures, the decline in quarterly deliveries is significant, especially when compared to the impressive performance of competitors like Li Auto, which reported a nearly 53% increase in deliveries for its first quarter. NIO's recent partnership with CATL to develop longer-life batteries shows the company's commitment to innovation and addressing industry challenges. However, former MI6 chief Sir Richard Dearlove continues to express concerns about Chinese EV firms, viewing them as potential national security threats. Now, there are some analysts who believe that NIO could be a short-term play, but not a wise long-term investment. The Chinese EV maker has been facing challenges amidst weakening EV demand and fierce competition in the domestic market. Despite a somewhat positive outlook for Q1 in its Q4 report, NIO's shares took another hit when the company revised its sales forecast downwards. Investor sentiment has also soured, with shares down by 50% year-to-date. One top-rated investor, Bohdan Kucherayev, expresses concerns about NIO's ongoing struggles. He highlights the company's difficulties in the EV industry's price war and its high cash burn rate. Kucherayev believes that NIO will require additional funding to stay competitive, which could further impact its financial health. While he has shifted his short-term view from sell to hold due to potential short-term rebounds, he remains skeptical about NIO's long-term prospects. Wall Street's sentiment towards NIO is mixed, with some analysts echoing Kucherayev's hold rating. However, there are also optimistic takes, with an average one-year upside of 53% from current levels. Despite the differing opinions, it's clear that NIO's path forward remains challenging, with uncertainties surrounding its long-term viability in the competitive EV market. But do you really know NIO's position in the hyper-competitive Chinese market? Well, it's clear that NIO is facing significant challenges, especially with the recent pullback in demand at the beginning of the year. The competitive landscape in China's EV market is fierce, leading NIO to adjust pricing strategies to sustain growth. However, maintaining volumes in such a competitive environment will be tough, especially with weakening demand and continued pricing pressure. NIO has yet to achieve profitability, unlike its rivals such as Li Auto and XPeng. While NIO has unveiled new vehicles and plans to launch a mass-market brand, profitability remains a distant target, with XPeng aiming for 2025. The unveiling of new vehicles is part of NIO's strategy to diversify its brand portfolio and capture a broader market segment, potentially expanding into other markets as well. As for partnerships, NIO's recent collaboration with Volkswagen, backed by Abu Dhabi CVN with a 20% stake, highlights the importance of such developments in this competitive space. Partnerships like these provide much-needed capital to weather the challenging economic period and strengthen NIO's position in the market.
And a new player has zoomed into the arena, looking to shake up the industry and park itself in pole position. We're talking about Xiaomi. A household name in smartphones and electronics, Xiaomi is now entering the electric car market. Last week, they launched their first EV, a sedan called the Speed Ultra 7, or SU7 for short.
Now, did you know that Xiaomi's announcement about entering the electric vehicle market gave NIO stock a significant boost? Xiaomi, renowned for its consumer electronics, unveiled its new SU7 EV set to launch on March 28, 2024. This move has injected fresh momentum into the Chinese EV market, benefiting players like NIO and its counterparts. The news of Xiaomi's foray into EVs has led to a surge in Chinese EV stocks, signaling expansion within the sector. Despite ongoing price wars in China's EV market, Xiaomi's entry has breathed new life into the industry, offering a much-needed uplift to various Chinese EV producers, including NIO. While Xiaomi's move is promising, uncertainties linger due to the persistent price war. However, the company's decision to venture into the EV market warrants attention and analysis. As NIO stock continues to see positive growth amidst the volatility, Xiaomi's upcoming launch adds to the optimism surrounding the Chinese EV market. Furthermore, Xiaomi's commitment to EV production, backed by significant investments and government approvals, underscores its ambition to become a major player in the automotive industry. If successful, Xiaomi could emerge as a formidable competitor to established brands like Tesla, leveraging its expertise in consumer electronics to drive innovation in the EV sector. But before we move on, we just want to thank you for watching this far.
So what they're trying with this battery swapping is this really novel solution to this road anxiety issue, which is the idea that you could drive your vehicle up to a station and instead of filling it with gas or sitting there for it to charge, you have the battery swapped out in 5 or 10 minutes and have a new battery put in. It's a different model. It's a very capital intensive model, and it's a uniquely Chinese model. China's doing a lot of things in the EV sector that are just not seen anywhere else in the world. A lot of really, really cheap cars with short mileage, and then you have this novel idea of battery swapping that is a small part of their business, but a lot of the excitement around the stock is hopes that it'll be something someday for somebody.
NIO also isn't backing down in the race for dominance in the electric vehicle market. In its bid to gain an advantage in the EV infrastructure realm, the Chinese carmaker has been forging partnerships to expand its battery swap network. Since November, NIO has collaborated with 4 major Chinese automakers to develop standardized battery swap standards and bolster the network across China. Additionally, agreements with 2 local battery companies underscore NIO's commitment to enhancing the battery swap experience for consumers. The focus on battery swapping is driven by the need to address consumer concerns about driving range anxiety. While traditional charging stations remain prevalent, battery swapping offers a faster solution, taking just a few minutes. NIO's efforts have resulted in over 40 million completed battery swaps, surpassing the charges at its public stations. This highlights the growing acceptance and adoption of battery swap technology among NIO's consumer base. Shenfei, Senior Vice President of NIO's Power Division, emphasized the company's dedication to providing a seamless charging and swapping experience for users. NIO's battery swap service promises a quick turnaround, with drivers able to get a fresh charge in just 3 minutes, provided they opt for a paid battery service plan. Looking ahead, NIO plans to expand its battery swap network to accommodate more car models, ensuring compatibility with evolving battery technologies. While NIO's power services and other products contribute only a fraction to its total revenue, the company remains committed to investing in infrastructure development. Its early investment in battery swap stations positions NIO ahead of market demand, with plans to install thousands more stations in the coming years. Despite the higher upfront costs associated with battery swap stations compared to traditional charging stations, NIO remains optimistic about the long-term viability and sustainability of its infrastructure investments. Furthermore, NIO's collaboration with battery giant Contemporary Amperex Technology underscores its commitment to sustainability and innovation. By developing batteries with longer lifespans, NIO aims to address concerns about battery waste and environmental impact. Moreover, the recent performance of NIO's stock paints a grim picture. It breached a critical support level at $4.80, reaching its lowest point on March 5th of this year. Furthermore, the stock has consistently remained below the 50-day moving average, indicating bearish control in the market. The decline in the average true range suggests decreased volatility, while the retreat of the relative vigor index adds to the bearish sentiment. With these indicators signaling a bearish outlook, investors are closely monitoring the psychological support level at $4. Despite occasional fluctuations, the overall trend suggests a challenging period for NIO's stock. So, do you think NIO's current stock price is a bargain or a value trap? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you're wondering about NIO's recent stock upgrade, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.